And in this lesson, I will talk about trading break the trends with smart money concept. So the first one, what you will learn is the SMC map, and the second one is what you should focus to trade. It means that step by step how to trade with this break the trend with smart money concept. And the last one, I will give you an example to understand about this strategy. So let's get started. The first one, SMC map about break the trends. And when you open the chart, normally you also need to analyze structure in the higher time frame at this time. And the results also same, obviously structures. For example, at this time, the structure we have here is lower low, lower high. That is obviously structure of the down movement. And the second step defines the BOS to define the trend and direction. And at this time, you can see that here is our BOS. The recent high creates the lowest low, and the last step in the first page is breakout BOS, and the result we want to see here is a real breakout. And you can see that at this time the green line already break out our BOS. It means that market direction also changed from the down movement to up movement. That is a break the trend. And at this time I will analyze detail about this way, this green way or breakout way. And in this green way, we have three types. The first case, that is the straight way and have no any structure inside this way if you look in this higher time frame. And in this way, you also have the imbalance in this way that show you that smart money also join into the market to break the trends. And the second case is smart money break the BOS. Very obviously, the structure is higher high, higher low, and at this time you also can define BOS. And in this way, we have the imbalance in the first pool of the market and the second pool as well. And the last case, we also have the structure very obviously with higher high, higher low, but at this time we only have the imbalance in the second pool's way. In the first pool way, we don't have the imbalance, or the imbalance already filled. Therefore, the step by step in this page, the first thing you also need to analyze the structure in the higher time frame of the breakout way to see the obviously structures. And the second one defines the imbalance in breakout way, and the result we want to see here is strong or strongest as our standards at the first lesson about the imbalance. And the third step is to define institutional candles. At this time, very special case to drawing the Fibonacci. The result we also see here is a define the POI or the order block zone, the zone we want to wait price pullback and entry with smart money. And the special thing here, you need to know where is play. You can draw in Fibonacci. For example, in the first case, we have the imbalance from the low to the high, therefore drawing the Fibonacci from the 0 to the 100% from the low to the high, cover all the way to define POI zone. And the second case also the same because we have the imbalance in both of the pool way, therefore drawing from the low to the high, also the same action. But in the third way, have a little bit difference because at this time, we have no imbalance in the first pool way, or the imbalance in the first pool way already filled. Therefore, we only drawing the Fibonacci from the BOS to the top because only on the second pool way we have the imbalance. Therefore, analyze on the second pool way is enough for us to entry or find out the POI. And one more thing, even we have the BOS over here, but this BOS no more the function. We no need to check whether this pullback come into the discount zone because this zone only have the one function is break out the BOS to change the direction. If you analyze, if you trading with a continuous trend, we should analyze whether this pullback come into discount zone to follow, but in this time, no need to care about this because the function of this way is breakout BOS. That's it. Therefore, if our POI lower than the BOS or break out the BOS, don't worry, you still can wait an entry with the POI lower than the POS because price already break out our BOS of the higher time frame. Therefore, entry at this POI also very good. Don't care about this POS. You just drawing the Fibonacci to care about where is our order block or the POI. After analyze very obviously about the breakout way, at this time is very same as continuous trends. At this time, the price will pull back a little bit into our first BOI zone and break out of the BOS, a pullback way. And at this time, we define the second POI. And after define second POI, you wait price pullback and entry with smart money. Also the same with continuous trends. Therefore, I will quick talk about this page and let's jump on to the example to understand fully about these strategies.